Happy New Year, everybody! Welcome to Audrey's Insights. I'm Audrey Wise, a realtor with Journey Realty Group here in Western North Carolina, and welcome to the first episode of 2021. Today's episode is going to be a housing market update. I'm going to let you guys know what went on in 2020 as far as how the pandemic affected the housing market, and then we're going to look at what's projected for 2021. So let's take a look right quick at this housing market recovery index chart. This just gives you a visual picture of what happened in the housing market. And you can see a big red line there, right, where when they shut down the economy, basically. February 1st is right here. And that's their baseline. You can see the dotted blue line is basically the February 1st baseline that they're basing this on. They have used or looked at four components: housing, demand for housing, supply of housing, home prices, and how long the homes are on the market to come up with this information. But basically you can see that the pandemic happened right about here when we had the government shutdown and people panicked, stopped all market activity for a little while. But by May 2nd, you'll see that the housing market had already started to recover. And they did project a V-shaped recovery, and that's exactly what you're seeing here. This is a V-shape, a strong recovery, and by November, we had surpassed our benchmark where we were at February 1st. So there's a little dip right here, and that is because of election week. People kind of paused and hesitated, but not for very long. It comes right back up after that. This was the springtime. This is the spring market. Normally our spring market is the busiest time of year, but in 2020, because of the pandemic, that spring market got pushed to the fall. So that is why we've had a really crazy busy fall, lots of activity, which in fact is probably going to push winter sales numbers higher, because all of these homes that went under contract during this time, now they're closing in January and February. So that's going to skew numbers a little bit for 2021. So a couple of hot topics right now. One is foreclosures and the other is rising home prices. So we'll look at those as well. This graph shows the number of mortgages in active forbearance from May through November, December. And you can see that there has been a gradual decrease, not an increase, in the number of foreclosures, or forbearance rather. So a lot of the people who were taking advantage of the forbearance, upon exiting that forbearance plan, 54.6 of people, that's all these people over here in the green, are paid in full. That means they've either paid it off or they're current with their payments. And then all of the blue, that's 30.7%, have worked out a repayment plan or have modified their plans somehow. So that only leaves 14.7% who are still in trouble. And this is the percentage right here where some of those homes could go into foreclosures. It doesn't mean that they will, because some of those people have enough equity that they can sell their home and get out from under that. But we will need to kind of keep an eye on that. Some of those homes that will go into foreclosures, those homes will be bought up and absorbed by the market. If you happen to be watching this and you are wondering if you qualify for forbearance or you want to take advantage of the forbearance, this next slide gives you 5 things to ask. And I'm not going to read through it because you can do that. I'm going to make it available to you in a link down below in the description. So you can check that out and see if you can qualify for the mortgage forbearance due to the coronavirus. Another question that's on people's minds right now is, are we headed for another housing bubble? Are home prices too high? Are they going up too fast? You can see from this chart that since 1991, historically, home prices have appreciated about 3.8%, and right now we're at a 6.1%, and people are wondering, can we sustain the continuing rise in home prices? And this chart here, showing you the inventory and the home prices from 2010 to today, explains why and how come this particular situation with home appreciation really can't compare to the housing bubble of 2008. And the reason for that is because we have so much less inventory now than we did back then. Back then we had tons of homes on the market. It was a definite buyer's market, and today we're in a seller's market. There's very low inventory. You can see if you look over here in 2010, we had about 8 months worth of homes on the market, and then in the middle of 2010 we actually got up to 12 months supply of homes on the market. Well, today we're looking at 2 months worth supply of homes on the market. So as that inventory goes down and buyer demand remains high, it's going to drive prices up. And things affecting buyer demand right now are, one thing that's changed is people's lifestyles have changed. They are looking for homes with second living quarters for relatives. They're looking for homes with extra rooms for homeschool rooms, and they're also looking for extra office space in their rooms. The pandemic has changed the way people live and work. Where some people will be going back to the office to work, a lot of people have decided they're going to continue to work from home. It's working out well for them, and so they're looking for homes that will meet those needs, those different lifestyle change needs. So when we look back at 2020 and looking into 2021 and how this coronavirus has affected everything, it has affected people's lifestyles, changing what they're looking for, driving people out of cities. So buyer demand is high, inventory is low, and obviously we don't know what that means as far as how this virus is going to affect the economy this coming year. It's going to depend on the vaccine and when that comes available to everybody, to the general public, and whether or not we can resume normal economic activities, shopping and dining and all of that. What happens with the housing market is going to still depend on what happens with the virus. But according to Freddie Mac, I can tell you what their projections are as far as the mortgage rates. They are looking at continuing to keep it low. They're saying in 2021 we're looking at around 3% for every quarter. That's coming straight from Freddie Mac. So yes, home prices are high right now, but they just don't compare to the 2008 housing bubble. And it goes back to the fact that we just don't have the same supply that we had back then. Buyers today are taking out fixed rate mortgages rather than variable rate mortgages. 14 years ago, there were tons of houses on the market. Today, there's hardly anything out there. There were 3.8 million homes listed for sale. Now we're at 1.5 million homes listed for sale. Another piece of information from the National Association of Realtors, they are expecting home sales in 2021 to come in 7% above 2020. If you are in the market to buy or sell, or you're thinking about doing either one, I do have buyer and seller guides available, and I'll put those links down below as well. So click there if you'd like to download your free copy.
So here are the 3 key takeaways from today's video. Number 1 is foreclosures. There will be a few, but they're not going to be anything like they were back in 2008. So don't expect a huge housing crash because the circumstances are different. Number 2, we are expecting home prices to continue to appreciate into 2021, and we are expecting a strong housing market. Number 3, interest rates are going to continue to be low throughout 2021, according to Freddie Mac. And don't forget to click the links below in the description if you need a home buying or selling guide, or if you need more information on asking for forbearance. Thanks so much for watching, and I'll catch you next time on Audrey's Insights.